welcome back, guys. So we are now moving on with the program. And the next panel is on tokenization of real world asset, and particularly with a focus on real estate. So we are privileged to have great experts on stage, and we have a great moderator, Kristi Swartz, which we have seen from, which is a panel from the LA Piper, which we already see on stage yesterday evening. Our fireside chat was absolutely fantastic. So I will pass the mic to Kristi and for introducing the rest of the panel. Thank you.
Both.
Yay, round of So good morning. I am going to pass the mic around. I'm going to actually stand because I feel like, with this group I may need to keep them under control. So I'm going to stand. We are talking about real-world assets and real estate tokenization. So I'm going to ask each one of you, I'm going to pass the mic along quickly, talk maybe about yourself and introduce your companies that you're with.
First up. Hello, everybody. My name is Niall Roche. I'm a founding partner at Web3 Venture Builder business. Building Blocks. I have a background in tokenized real estate where I was one of those naive people trying to start a crypto company in 2017, looking at tokenized real estate in the UK, and Scott will later explain why that was such a bad thing to do, particularly at that point in history. So, but later moved on to work in a law firm, worked with the UK Land Registry on their first tokenization efforts inside the UK around digitizing the land registry on a DLT platform. Also involved a little bit in the construction side as well, so before the building is built, around provenance of assets and tokenization of things like steel beams on construction sites, random things like that. So that's my background in real estate, in particular, looking at getting back into this now, so it's interesting to see how the space has moved on, and maybe we can address that on the panel, how things have changed since we were looking at this in 2017, 2018.
Awesome.
Hi, I'm Reza Bundy. I'm the CEO of Atlas Capital. Atlas is an ETF business that started with Goldman Sachs about 3 years ago. We built an index with them that protects the US dollar by applying negatively correlated liquid assets to it, REITs, gold, food commodities. And the thesis is that if the dollar or other currencies have some sort of what I would call volatility or some sort of devaluation environment, these negatively correlated hard assets would support the dollar within the ETF to balance out the losses. Now, one of the key ingredients in this asset allocation is REITs. And we pick REITs, real estate investment trusts, in North America down to the zip code level of their portfolios that are in areas that are insurable. So not Tampa, Florida, or Texas or other places, but places that will likely be areas of migration as Americans look to moving to safer grounds. Now, in America, about 48% of the real estate is now seeing less and less insurance coverage because of the risks that are associated with climate and other risks. And as these risks materialize, insurance companies will move away from certain jurisdictions, which will make it nearly impossible to get a mortgage unless you have an insurance policy associated with your property. So we look at property and illiquid assets as part of our asset allocation as being nation-building blocks for long-term U.S. sustainability. And this ETF is launching on November 11th, pending SEC approval. And then we digitize it through an RWA to create a more stable currency that has impact qualities to it. And that's the highlight of it. Thank you for having us.
Thanks, Kristi. Great to be here. So my name's Scott Thiel. I'm a co-founder with Matt Blum up the front here of Tokinvest. So my background with Kristi many years ago as a lawyer. So I was very interested in tokenization as really the digital transformation of law, the digital transformation of rights, and the creation of rights in a tokenized form that we would, as lawyers, typically put into contracts. The challenge with real estate, or indeed all real-world asset tokenization, has largely been inadequate regulatory frameworks around the world. And along with Kristi and the wider team, I was fortunate enough to be part of the team that worked on the development of the VARA regulations here in Dubai. And this is the reason we have now relocated here and set the Tokinvest business up here in Dubai, because we believe it is the most purpose-built and appropriate framework for what the rest of the world's been trying to do but struggling to do because of regulations. Our thesis as a business is really about democratization of finance for asset owners to be able to actually create new ways of attracting liquidity, and for investors to be able to access excellent product. So really at this point in time, we're in the final stages of our VARA broker-dealer license process. We have a range of projects and issuances that we are already working on and collaborating with the regulator, including, given the topic today, real estate tokenization. And what we're looking to do is create fantastic product and give more people access to that product. So very excited to be here.
Thank you, Harold.
Thanks, fully agreed. And thanks for having me, Harold. Maybe the wooden shoe gave it away. I'm Dutch, based in Amsterdam. Amsterdam, of course, we call it the Chicago of Europe. A lot of trading firms there, so there's a lot of trading. My background is in trading equity derivatives for about 25 years, from an exchange angle, from all sorts of angles. So, and I'm old enough to have witnessed the 90s transition technology switch from floor and voice trading to electronic trading, and how that broke open markets and distribution, how that exploded. Like suddenly you had your 24/7, or not your 24/7, but still your global brokers executing everywhere in the world instead of just being on that little floor. I see DLT having the same potential, and that this is Archax, which is a UK firm, actually. We focus on DLT and blockchain technology, and the vision of the founders has always been all assets will have an on-chain representation at some stage. That was how it started. Founders were also having a history within hedge funds, so they knew that you had to embrace regulation. You can't just push it away. So we embraced it, and now we have in the UK, permissions to run an MTF, a brokerage, and a custodian for traditional finance. Plus, we were also the first on the crypto register at the FCA. So we're literally bridging the gap between traditional and, but more about that later. Thank you.
Thanks for that. I think I'm going to start with a very simple question, but I'm going to be very interested to see the reaction and maybe the response from each of you. So to you, what is tokenization and also real-world assets? I'm going to start out by saying, to me, tokenization is if I got hacked or somebody wants to steal my token, what's going to be lost? But that's my definition of what I consider to be tokenization. If something gets lost and somebody gets angry in that, but I'm going to pass it on and see what you guys feel about tokenization, real-world assets.
Well, let's start with the getting lost. I guess talking about real estate, if you lose your keys to the house. It's a similar sort of analogy, really. True. It's actually an area we're working on at the moment around decentralized key recovery. Very good initiative started by Hedera, and we work on that, but it's cross-chain and it's agnostic. And hopefully that will solve some of those problems around management of keys and what happens. I think that is a huge problem that's been holding back the industry anyway. In particular, what happens, people are human, they will lose things. I think some of the more grown-up platforms are looking at that and saying, look, if you lose it, think of it like a Web 2 experience, we'll burn that token, if you prove your identity, you can reissue it. I think that is a basic set of requirements for this industry to actually flourish. We have to be realistic. We have to tread that balance between the decentralized ethos, the cryptography that underpins this entire industry, but the reality of key management. So I think we had a great talk yesterday from Xavier on what is a token and the different classes of tokens. I think it was very nicely illustrated out there. You can have the thing itself, whatever the thing is. With the building blocks, we're working on all kinds of different assets, from real world to songs to music. Scott mentioned a lot about rights. In many cases, it is the rights associated with these real world assets, right down to financial assets as well. So you can have the item itself or some synthetic derivative of the asset, or something that grants you rights or an income stream associated with that thing, whatever it is. It could be a royalty, rental income, or whatever the underlying income stream is associated with that asset. That would be my high-level view on it.
Okay, thank you.
Great. Well, I'd agree with you, of course, but tokenization is just another way of creating liquidity for things that are otherwise not liquid or accessible because you don't have the ability to buy those instruments, whether you're in the global south or whether you're in environments that don't offer you those financial services and instruments. RWAs are just a fancy word of calling it assets. Real-world assets is just a security, a bond, an equity, a real estate. It's just literally an asset, and I think the word comes from the crypto world where the underlying assets are not backed by anything, like Bitcoin and others, maybe electricity, but most of the RWAs are the kind of securities that you see on the stock market and the illiquid markets. So that's my definition of it.
Thanks, Scott.
Yeah,
Don't give us you're not a lawyer.
no, I'm going to say your answer is the lawyer answer. I've evolved, or I'm evolving. I mean, as Niall pointed out, this is not Bitcoin. So our platform enables you, we have a help desk if something goes wrong. We can revalidate you. We can burn and reissue your token. So, the security, the hypersensitive security issues around crypto, kind of cybercrime, etc., and just, user experience, we very much disappeared. Our platform looks and feels like a Web 2 experience, and those kind of concerns about losing your laptop and trying to spend the rest of your life digging around a dumpster just won't exist for these types of assets. To the definition of tokenization, I want to come back to the evolution of the internet. Web 1 enabled us all to access all information effectively. We went from being, the information we could get around us from the local public library, maybe from what Channel 7 served up at 7 o'clock at the nightly news, to we can access all information at any time. Web 2 was the ability for us to actually move into content creation. So information flow became two-way. And that was, the ability to become a publisher, a journalist, an artist, and to share your information. Web 2 was the read-write internet, but it was still purely information-based. To me, tokenization is the true evolution of Web 3, which is the ability to put not just information, but the thing of value into an instrument called a token that is now able to be moved. Now it can be moved from one person to the next. It can be fractionalized. It can be collateralized. And if we look at that as the digital transformation that we're now in, and we look at what's happened with the unregulated sort of crypto NFTs space, there is huge desire to participate. The world wants to play. And Kristi and I have been debating the merits of digital monkey pictures for a number of years now. But what was very clear from that is the world wants to play. Currently, they want to play meme coins. That's great. But for me, real-world asset tokenization is let's take all of that accessibility, transferability, and participation, but now enable people to actually effectively be investing in real things, whether that's real estate, bonds, funds, commodities, etc. So that, to me, is the evolution of what we're seeing with tokenization.
Still kind of a lawyer's answer.
Not there yet. I'm evolving.
All very good points, and just also beyond tokenization and tokens and real assets. When I joined Archax and was in the first debate with Aberdeen Asset Management, they led our Series A back in 22. The word token doesn't arise ever in no cryptocurrency, any of the conversations. It's all about what they see that DLT and blockchain technology will help them distribute and be in front of other customers that they've never been able to find before. So for them it's a revenue driver plus the efficiencies in the back. So it's a double-edged sword for them and other asset managers we see to be able to distribute product in a different way. And yes, that we call it a token, but in the end, I think we discussed this also, like a token is just a wrapper. Right, like an ETF is a wrapper. It's a technology wrapper that makes it possible to put stuff on chain. Wrappers have been around also for 30, 40 years, like securitization of the 80s. That's where it started. So we should be, shouldn't be scary to anybody. And I think the biggest use case, and we're not doing that yet, but we can all imagine that you're on your couch on Sunday evening or afternoon, and you want to trade NVIDIA, and you can't because the system closes on Friday evening and it opens on Monday morning. So if a Robinhood type of broker gives you the ability to trade that NVIDIA on Sunday afternoon, it might be a token, but you don't see it as a user. So it's like the users will actually not see it probably. So It's my...
I love it. We didn't practice this at all, I swear, but Harold led
Can I jump in?
into where I was going to go. I'm going to hold you off a minute, Scott.
Oh, sorry.
The wraparound. It came up during your discussion, I think, when you were at Dubai Harbor, Scott, about do we really think that real estate tokenization is anything new? Or are we just putting a wrapper around it? Or are we basically creating new products? So maybe, I'll start with you, Scott, to discuss.
Yeah, I mean, what we're doing is absolutely creating new products, and that's not to take away from, you mentioned the Aberdeen, and we're obviously, partnering with Archax and working on this journey together and have been for a number of years. But, the kind of TradFi going digital to bring process efficiencies and to access a wider demographic through, smaller bite-size access to product, for example, that's absolutely, a legitimate ambition, and we're going to see lots of that. However, when you talk about the new product, that's really where our sweet spot is. We're looking at creating new product. We're today, can anyone in this room go and get a $10,000 unit or access to one of the very popular off-plan properties that are now happening here in Dubai? That product does not exist today. We're looking to bring that type of product to market in the next few months because this is clearly a desirable asset class. It's clearly a very, very exciting market, in a global perspective. It's the hottest property market in the world. 70% of property last month was off-plan property. People want this stuff. So the ability to actually use this technology and these new regulatory frameworks to offer a product like that is fundamentally a change in what's happening. And that's not to take away from the process improvements and the other things that as TradFi goes digital, and it's great to see that happening, but our real passion is around the new product.
Right. Maybe I'm going to pass maybe to Reza now. What do you think? Do you think it's new products, old products, wrapped up in a new way? Where are we going with this?
No, I think the efficiency play is obviously important for asset managers and fintech companies, but I think there's a bigger play here. I think when you look at the world's currencies that are backed by the full faith and credit of governments that are in disarray or asymmetrically at risk, and you look at how indebted we are as a Western, society and other countries that are in the Forex world, I think there's an opportunity to reinvent the monetary system. I think there's a way to bring assets to the forefront that not only protect currencies, gold and such, other things that are effectively hard assets, but also do public good. Invest in real estate, invest in agriculture, invest in land, put illiquid assets on chain to be able to create capacity for governments to protect their currency and do the kind of impact investing that's necessary to evolve countries' resiliency factors. And the United States is a great example of that. You've got a divided country, an election that may be undecided. You have large-scale climate impact on real estate markets that are being significantly, more and more visible to the markets. And you have to figure out how to bring some of that capacity that government doesn't have anymore to allocate to assets that are resilient, that are useful for society and have impact. So we think that RWAs are an opportunity to not just create great efficiency and access to markets and democratize things, but also to create monetary stability and long-term investments in areas that governments no longer have the capital to do themselves. So that's our view on things.
Yeah, I'm going to hand over to Thiel and then we'll go to you, Harold.
Yeah, I completely echo all of that. I think it's a major issue at the moment for younger people to get some sort of exposure to real estate. It's becoming harder and harder to buy houses in larger emerging markets. Definitely not so much in emerging markets, in established markets. I live mostly between London and Dublin, two very difficult markets to buy a house for traditional under 30s who kind of basically live with their parents until they're far past the age that I was at that age. So there's a real issue there with getting access to affordability of property and getting access to property. And I think that inclusion piece is hopefully some benefit from this, is that if there's some level of aspect, some entry level where you can get exposure to either one particular property, your own property, people later in life being able to release some of the equity and tokenize that. There's all kinds of potential new ways that we can work with this system. I know that the land registry in the UK, one of the reasons why we were doing this project and experimenting with things was that could you facilitate microloans with a token that would represent your current set of ownership for your own house. So it's sort of equity unlock, and then that would have an on-chain representation. Now, that was an aspirational goal. We're a long way away from getting there, but that is hopefully what we might arrive to in the future. And on the original part of the question about, is it wrapper? Well, I think we need to move away from these levels of indirection, SPVs, special companies that have high friction, high cost associated with wrapping the asset. It's a hack. I'm a developer, I like hacking around the solutions, but basically that's what it is. We need to tokenize the asset itself, not just some derivative, not some SPV, which has different types of tax accounting issues. The land registry were very much against this in the UK because they didn't want to know what company owns the property. Who owns the property? Who do we tax? Who pays the council tax if it's a residential property? They don't want this level of indirection. It's a hack. It has to work that way in many cases, but hopefully the regulation will move on, and it sounds like in this jurisdiction and the stuff that Tokinvest and other companies in this space are looking at is a better way to tokenize the underlying asset, not this horrible SPV hack.
So you keep the microphone, because I want to come back to this. I'm going to hand it over to Harold now, though.
Thanks, Kristi. And just adding to that, I mean, just my disclaimer on real estate. I mean, we stick to stuff that has an ISO code.
You want this one?
Yeah. We do it one.
Maybe you'll bring it back then.
Yeah, maybe it's just me. So we stick to products that have an ISO code and take it from there, because that's where we see the first scalability. I agree with all of you that I mean, real estate is such a powerful use case, like access, and also access to private equity, private credit, stuff that hasn't been available to a wider audience. And this is going to, the whole democratization, inclusive, it's going to break open a lot of things for a very, very wide audience. And that's where we see the best use cases. So what we do now is, it is a wrapper. It's actually, we call it a bot, the beneficial ownership token. So it's a money market fund of Aberdeen or BlackRock or State Street, or we have Fidelity. So the issuance is not on-chain. We don't get the BlackRock money market fund on-chain from BlackRock. I mean, we get it in our custody for the customer, and from that point on, we tokenize. So we use traditional rails. We do the normal subscription redemption model with these asset managers. So it's very cumbersome still. Next steps are still, of course, API based, and still, it's not ideal. But we thought we'd start here. I mean, it's the most boring product you can think of, right? Money market fund. So, and it's quasi-cash. And then, I mean, for us, the next step with that is that money market fund tokens can be used as collateral. And we're trying to sort of create a conglomerate in London and in Europe of banks and asset managers that will create a collateral network where they will 24/7 accept that sort of money market fund token to flip 24/7 in and out of that token. So that's, I mean, we just talked NVIDIA. Here you can go risk off on a Saturday evening and go into a money market fund token and get a yield. I mean, it's not there yet, but I mean, we're getting a lot of interest from banks and asset managers.
I love it, Harold. You keep setting me right up for the next question. I love it. So the reason I was coming back to Thiel maybe to have the first part of this question is, I would be remiss if I did not bring up regulation. Deepa and I talked yesterday about a lot of the opportunities that the regulatory certainty has brought here to Dubai and other places that adopt regulation for virtual assets. I think the question I'd like to ask all of you is, regulation, good or bad, but what are the opportunities? And I started to mention some of the things and obstacles, maybe with regulation. You mentioned all the things about the lands department, about things around registration. How do you basically fractionalize that? I'm going to leave it there, and then we'll come back and finish the question off. But maybe you can start and tell us what's been your experience, opportunities, difficulties, regulation, good, bad?
It depends on what jurisdiction. There's been a lot of talk about this. Look at how the industry is affected by the lack of regulation in the US, for example. I mean, the SEC, depending on which side of the bed Gary Gensler gets out of, who's he going after today? Legal certainty there will have a huge impact, I think, on this entire industry. The lack of it is the It's creating huge problems for innovators, for entrepreneurs. What markets do you build? What do you build? What type of assets are you going to get in trouble with? Unless there's some certainty, we need guidelines. We need to see where the line is so we can go right to that line and try to innovate where possible. So without that, it's completely holding the industry back. So innovative regulation, obviously here being a leading example. I was in Singapore for Token 2049 recently. Great things going on in there. I believe in Thailand and Vietnam and Malaysia, the real estate of tokenization is actually taking off there. So it's because they have guidelines. It's because they have this certainty. Without the certainty, who's going to risk? Who's going to put the investment in? I mean, there's a large part of what we do is working with startups and helping them to get funded. So nobody's going to risk that unless you are sure that you're going to be adhering to the right regulations. In the US, we have some offerings in there as well. The friction involved in trying to deal with accredited investors and limited to a certain number of value of assets. Again, it's not scalable. It's useful for certain types of projects. It gets things off the ground. But until there's more support for retail investors in there and this inclusion is just not going to happen. You're just making that elite richer and getting access to those types of products. So without that, I think we're in serious problems. I think also enabling the government agencies to support this. So the Land Registry, for example, had huge issues just with digitization. You were talking about, Harold was mentioning about APIs. Those APIs didn't really exist. They were building them as this project was developing. They had bigger problems. They had 26 miles, a literal marathon of paperwork. Paper of old title deeds sitting in a very large registry. They were just digitizing the system. The title deed itself wasn't capable and still isn't really of dealing with hundreds or even 10 people on the register. It just wasn't set up for that. So there's regulation, but there's the ability to deliver on that regulation, and there's a huge amount of friction involved in that. We've seen some reasonable stepping stones towards that with the sandbox and the FCA, but it takes a long time for that to come to fruition, to get the guidelines right, to enable consumer duty of care. My colleague Kristi was talking quite a lot about the regulations in the UK, about protecting people from crypto scams, and in certain cases protecting them from themselves. We have to have that level of protection as a basis, but it can't stifle innovation. It has to be getting that balance right. And I think that's a hard thing for regulators in general, but without getting that balance right, it's not going to grow into the industry that we hope and believe that it will do.
I'm going to flip it over to Scott. Thoughts?
Yeah, I mean, I'm certainly pro-regulation, despite my extensive involvement in crypto projects over a number of years. I think that industry has suffered through a lack of regulation and, as I shared at the Future Blockchain Summit the other day, by regulators who thought they were doing a good job by forcing people offshore, so it was no longer their problem. None of that protected investors. So I'm a big believer in appropriate regulation, but I think some of the themes that I want to pick out are around, access. Democratization of finance means democratization of access to interesting and high-yield product. Investor protection is an important facet of any regulatory framework, but concluding that all people that don't have $1 million sitting in their bank shouldn't be allowed to buy interesting high-yield product, I think is fundamentally at odds with human rights. Actually, this is an issue where I do not agree with the way TradFi has been built up. And most of these people, as I was alluding to earlier, they want to play. They weren't allowed to play with interesting asset-backed real things because of TradFi rules around only if you're rich enough, which is really what accredited investor means. Those people then have been participating in crypto and NFTs and meme coins because they can participate. And so to me, it's really, it's essential that the regulatory frameworks do support that financial inclusion. And what we heard from Rahul really is the UK is not ready for that by a long way yet. So you can't actually do the thing that you want to do. The last thing I want to really pick up, and it was Deepa's very, inspiring fireside chat with Kristi yesterday. VAR isn't worried about hard. This is going to be hard. And they are prepared to build the plane to a certain extent while it's flying. And they want good people coming in with great projects to do things. But if you listen really to that, really passionate delivery yesterday, it was all about, and this is the beauty of Dubai and why I'm here, how do we make this a better place? How do we make this a better society? How do we enable people to participate in parts of the economy like financial services so that to the benefit of all? And I think that's the fundamental difference. I've worked with regulators Across the world, I'm going to name the SFC as I always do, Kristi, because it's a little thing we have going here. But I sat with the SFC in a sandbox environment with a real estate tokenization project for more than 12 months. High quality asset, yielding data center, high quality group of issuer clients, and a LISCO issuer and a group of institutional investors. And the SFC couldn't see a problem with this, but they also wouldn't allow it to actually happen. And there was two things. The thing I challenged them was, you're actually holding back Hong Kong as a financial hub and participation. During a time where home and housing affordability is a global crisis that continues to get worse, you're not allowing people to play. And they gleefully pointed out that nowhere in the SFC's charter was there an obligation on them to promote Hong Kong as a financial centre. Now, if I compare that to here, so it's not just regulation, it's regulatory attitude. I think it's really critical, and that's why we're here and why we've set up here.